Yo, what is up, guys, and welcome to the first Wednesday lecture of the SPY overview, which be doing Sundays and Wednesdays. So if you're new to the channel, welcome. This channel is going to be basically totally free.
For
Free. I'm not trying to sell you guys a Discord or any stupid trading method or anything of that sort. I'm just trying to help people out who can't afford that expensive Discord or can't afford that expensive mentoring. Because I know I've been in that position as well. So basically, we're just going to go over everything you need to know for the days leading from today till Friday. And maybe I'll give you guys a little bit of an outlook into next week. There's still a lot of uncertainties in the market with Jerome Powell kind of hinting that soft landing could be out of the question and that more rate hikes could ensue in the coming days, or not the coming days, but the coming months of 2023. So today was obviously an intraday trading day. Obviously, this red candle is rather bearish, but also neutral in a sense. We did close above 410, which is a really good sign. Obviously, using this demand that we talked about last lecture, 410 to this 390, huge demand buying area. We kind of used it as support here. If you can tell, we used that 409.95 to 410 range as our support, which is good. That is a strong sign that we could see more potential upside. There is a few things I'd like to look at in this lecture that might take that bullish narrative and kind of crush it, I guess, in a sense. I always like the market when it's going up. I'm personally not one to... What I'm trying to say is, to be a good trader, you need to play both sides. You need to let your emotions, get away from you, and you need to just kind of focus on what will make you successful in the market, not whether you want it to go up or not, or want it to go down or not. My basic rule of thumb is at least 4 reasons why I should enter a contract, an options contract, enter a stock, for example. It doesn't really matter. That's just my rule. Obviously, people are different. It just kind of all depends on your risk management. Everyone has different risks. Everyone has different account sizes. It just really depends on what you're willing to lose. So, all right, so let's just get into it right here. All right, so obviously, we've kind of been trading in this area for the past couple of days, ever since that FOMAtic meeting that kind of pushed us pretty close to this 420 level, but we had a pretty bad rejection. It's obviously, we're making higher lows here. You can tell right here. That was our first rejection point. Lower high. I meant lower high, not high or low. Lower highs. And it's kind of looking like we could see a leg down here back into this 400, low 400 range, and then maybe a potential bounce. Kind of fighting between the past 2 days. They've been kind of fighting. Buyers and sellers have been kind of fighting. We kind of ended up where we opened on Monday today. So we had this nice push up. Obviously, we hit that rejection level right here. It looks like previous support right here was used as rejection. We can see that we had a high the previous day after Jerome talked around 416 level-ish. But it was very weak and sold off pretty quickly. These are obviously very bearish signs here. You can see, these unfilled candles were trading below all exponential moving averages except for the 200. Now, the 200 could be our last support. Kind of similar, especially down here. This 408 support has just been keeping us above the 400 level for quite some time. You can obviously see that the sellers are coming in pretty strong today. The previous day, obviously, a lot of buyers and sellers, but the sellers seem to be dominating today, which is a pretty bearish sign. Obviously, if you look at this chart just in its entirety, it looks fairly bearish. But then we see candles like this, where we go and touch the 410 line and we kind of just bounce right back up, and then kind of retest the 411 area. But overall, it's kind of a neutral for me at the moment. I'd kind of like to see it maybe retest the 200, because it hasn't really touched it yet after this rally. Maybe we'll retest, go touch 408 one more time. And if we fall through, then obviously more downside. If we take, I guess here, I'll draw it out. So if we do end up, going down, touching it, I could definitely see a few scenarios play out. And this is the first scenario. We go down and touch it, we reject 410, and then we kind of persist to fall through it. That's the first scenario. Now, second scenario would be that we just, we go back down, touch the support a little bit, and then we start to go a little higher. That's kind of like probably like 30% that happens. Sellers have been a lot more present in this market as of recently. After that Tuesday debriefing from Jerome Powell, he kind of put us in a tough spot. He was saying certain things like, we could potentially have a soft landing, but there's not much to draw off of, I guess, in a sense. Like, Jerome Powell is just trying to please the people. He doesn't want to see the market crash because it's on his head, but also he doesn't want to give false hope to investors that there is a soft landing coming. Now that we're talking about Jerome Powell so much, I'd like to take a little bit of a look at these rate hike odds. So now I want to look at this. This is a really good tool. It's completely free, and it just targets the rate hikes possibility in the future. I'll leave the link down below, and I'm going to kind of show you guys in this lecture the different tools I use to analyze the market besides just charting it. So this is the first one I'd like to look at, and I don't normally look at this until we get a little closer to this Fed meeting. Like the previous meeting, I was constantly looking at it. We could see that we were only going to get a 25 basis point hike, which is very bullish in my opinion, so I went long. It was about 99%, 97% a week out, which kind of gives investors like a good idea, like, oh, like we should definitely go long here. It is. I'm pretty sure that in the next couple of days, this is not going to change too much. But what we're looking at now is that there's basically a 93% chance that we have another 25-point basis hike. Expected. Obviously, Jerome Powell has been flirting around the subject that we still could definitely see more basis hikes in the future, and that cuts aren't necessarily going to happen anytime soon. A lot of people were optimistic that we could get a 0 basis point hike, but that just doesn't seem like in the cards just quite yet. With a recession on the horizon as well, it doesn't look like interest rates will be lowered just because of decreased economic activity. But now we have this 6.3% that we could get a 50 basis point hike. Now, this narrative has changed since the last meeting. The last meeting, we had a 16% chance of a 0 basis point hike. Now this could get investors a little more on the cautious side rather than extreme greed side, playing a little bit more cautiously with their positions and potentially shorting the market due to this actually being a reality that we could see further basis hikes in the future. So with that being said, we're going to just go look at open interest. We're going to go look at max pain. And now there's a few tools I like to use to look at option activity. I don't pay for big flow. It's about $50 a month. No one wants to pay for that. I use free tools like max pain and bar chart. And we're going to get into bar chart after we analyze a little bit of the option disparity, I'd like to say. So if we're just going to go to the end of the week here, I'm never really going to look at singular days when I look at max pain. I find it to be not helpful. And for the most part, I personally would not use max pain unless it's a very huge options expiry date with large option volume. But I like to just check on it from time to time just to get some levels here. So what we'll first notice here is this 400 put area, 56,000 puts at 400, and then we have our high of calls at 410. So this is something that I'd like to look at as that we're going to kind of trade in between these two levels for quite some time. And with 405 kind of being that midterm, maybe potential bounce area. The problem with high options, calls, and puts at certain levels is that they kind of act as support. Big MMs, market movers, they don't like when they sell premiums, they don't like it to go into the money. So they're going to do everything in their power if they're selling put premiums. They're obviously going to do everything in their power to minimize their losses and keep the price above 400. And then same with the call sellers. They want to keep it below 410, obviously, and vice versa. So you can kind of see why I use this. It's kind of just a simplistic version of bar chart. So bar chart is a great website. It's free. There's a few things you can unlock, but it gives you like a nice idea of the options market as a whole. Okay, yes, get away, please. Okay, so we're not going to look at anything else but just SPY. So we can just type in SPY up here, and then it'll kind of just give us this quote overview of SPY and everything you really need to know. But what I like to go to is I like to go to the side right here, put to call ratios. All right, so let's look into this right now. Look at the option prices for Friday. Alrighty, so let's see here. Okay, so this 420 area, look at how, all right, hold on. So we got about 30,000 in volume in the money right now, with 39,000, 60,000, kind of sitting on the sidelines out of the money, and then you can see right here, 113,000 in volume at the 410 level. So this is kind of a tricky situation. This is pointing me towards that we're kind of going to go sideways for the next couple days. And when the market does go sideways, I really suggest that you guys should sit on the sidelines. Or if you guys are pretty good at scalping, it's a good day to kind of scalp because the price action is very volatile, yet we don't really see those upward moves, I guess. So it's kind of a quick in and out. And I think that's the best way to kind of use these days to kind of get in and out really quick. If you really want to make profit and you really, really want to trade, that's my personal opinion. Now, what we can see here is obviously it seems like we have a very slow day ahead of us, slow next 2 days ahead of us, which is pretty unfortunate. But obviously, after huge volume, after this huge run up, we do need the market to kind of digest a little bit. Give it a little bit of time to kind of digest this $20 move and then kind of settle itself. And then we can kind of maybe see another leg up or maybe another leg down. Obviously, just to close out this lecture, this is just my opinion. I am by any means a professional, but I do know a decent amount. But obviously, humans can be wrong. Human error is obviously in with any trade, human error with any person, no matter professional or non-professional, human error is just inevitable. So we made obviously our higher lows here, a very good uptrend, and we're still kind of following this uptrend despite the past couple days we've had. I think this is a good way to put it right here. So we're kind of like might slowly fall out of this uptrend here. I'd say anywhere under back into this like anywhere under 408.66, I'd go short. That means the higher low and that the uptrend is now kind of invalidated, and I would go very short at that position. Longs, this is kind of difficult. I'd say I would definitely go long over 411 to 412 area, but I would also watch for this 415 area that we have right here, which was our previous high. And I would just be kind of wary of the potential pullback because we could go back up here. We could push up to this level again and then really have a bad rejection. So that's my opinion for the week. I've given you guys the levels, and let's just quickly go over them. Okay, so 408, under 408, under this 200, we're going short. We're going short 100% until we hit around this 404 to 403 level. We'll go short. Above these levels right here, watching this 415 level, I'd go long. I'd go long over this level right here, this like 411, 412 level. I'd go long there, but I'd watch this 415 for some turbulence, or even this 413, 414 level. Just this area in general would be my main concern, just right here, my main concern. But thank you guys for stopping into the lecture. These are going to get better and better as I go. So if you guys like this video and want to see more of this content, make sure to subscribe. Make sure to leave a comment. Let me know what I can do better. I'm always trying to improve, obviously because I just started this. But yeah, so leave a like, subscribe if you want free Sunday and Wednesday market overview lectures. And also take a look at my video that is coming out right after this, which will give you 3 stocks and potential plays for the next week. Thank you guys for tuning in, and I'll see you guys Sunday.